Hello, how do I swing trade without moving averages? We are going to use two stocks here. The first one is TRY, and we have maximum daily chart that we open on Think or Swim platform. Maximum daily chart, and we like to swing without using moving averages. It does not mean moving averages does not work. If you know how to use it, it's okay to use it, but you can swing trade without them as well. For instance, we have SNPS open here, and I purchased it here in 2024. The arrows on the chart shows where we traded before. So the arrows facing up shows where we purchased. The arrows facing down shows where we sold. So we purchased in 2024 using short option and swing trading strategy, and we purchased it there. It pulled back, we kept it. It went up, we sold it, and then we purchased it again, along that short option lines, and then it just pulled back. It was done with this trend, and it pulled back again to this support line. So in 2025, we wanted to swing trade using long option line swing trading strategy. So when it pulled back to this support line, we bought it again. But especially my daughter, I'm teaching her how to swing trade, so she bought it when they start going up around that support line. So the strategy we are using is to buy at a long support line passing by the valley of the mountain, and this will be one cycle or one mountain, the upside of it and the downside of it. So when they come back to the support line and start going up from there after a few higher lows, and she purchases somewhere there, so we can say that this low is higher than this one. So pretty much after one higher low or so, she purchased it. So she purchased it, it went up, pull back, and just start following this support line to create a support line for the upside wall of the mountain. And she sold it somewhere there when it reached a peak. And maybe we can put the arrow a little bit higher up so that we can see it. So she purchased it there and sold it there. So, and that is how we swing trade without using moving averages. So we wanted to, it reached a new high somewhere here, and we just kept it for a few more days and we sold it. So that allows me to make a little profit on my purchase, and she made a good amount of profits from buying it here and selling it somewhere there. But then gradually it pulled back again to the support line, went up and start going up, and currently we can see that we have some higher lows here. This red bar is higher than this one, which is higher. No, this is lower than this one there, and this one is higher than this one, and this one is higher than this one. So we have an uptrend here, and I think she's thinking about buying it again. But yeah, it's good to buy at the first or second green bar that follow the pullback, or wait for another pullback and the green bar that will follow it to buy it. But just keep in mind that by buying it, it could still turn around, but by waiting for an uptrend around the support line before buying it, just allow you to trying to see if it's done going down. It's not going to go down further before you get in the trade, and then from there you wait until it reach a new high. So the principle behind how we swing trade without moving averages is determine the support line you like to buy at. With the strategy we are using, we choose the support lines that can be considered the valley line, and we want to buy the stocks at that valley line when they start going up from there, making higher lows. So after 3 or so higher lows, we can buy at the first or second green bar that follow a pullback. But again, around that support line, we can compare the previous time it touched base with that support line to see if it remained there for a while before leaving. That way we don't get in the trade too early. And once you purchase it, you'll continue to analyze the chart to see where the price is now to where you want to sell it. And where we want to sell it, because we are swing trading growth stocks, large cap growth stocks, upward stocks, our exit point is after the new high. We are trading using maximum daily chart, therefore an all-time new high will be displayed on it, and they are all-time new high. So by having this high here, the way we will do it, the first exit point will be after it exceeded the previous high, and the previous high is this level. So when the price exceeds that level, you can ask yourself if you should sell it or stay in the trade longer. And when it reaches this level, the second strategy will be to compare the previous time it reached a peak to see if it remained there for a while before leaving. And by looking at it, when it reached that peak, it just stopped a pullback, went up, but it didn't, remain there long. But we can look at the previous peak was this level, and then it pulled back to the support line. But then it decided, when it started exceeding that at this level, it reached a new peak there. So when it reached a new peak, it remained, it continued to climbing up for at least a little bit less than a year time frame. The dotted line are years. You have the year on the x-axis from the past to the present, and you have the price on the y-axis from 0 up. So for at least a month before it was done. So we could estimate that it might do the same thing here. Although it pulled back down again and start going up. So we could maybe just think that maybe it's reduplicating this instance here before start going up. We are not sure, but anyway, after it reached this level, I just advised her to sell it, and she sold it and she made that profit. It's all by doing that you learn from your experience. So let's take a look at TRY. I believe that's the one we wanted to analyze today, but that is how we, in fact, let's go back to finish this. So when you know that it might remain in the trade for like a month, for instance, it might continue to make higher highs for a month, for instance. That's the way it did it previously. If you assume that that pattern will repeat itself, then you can decide to remain in the trade for 4 more months, at least half of that time frame. And that is the second strategy. The third strategy will be to try to quantify your exit price, the price you are willing to sell it. So to do that, we like to see the price at the support line previously, which is 270, and the highest peak within the circle, which is 623. 623 divided by 270 is giving us 2.3 ratio. The price double, more than double. So 2.3, then we can say that, okay, so the lowest price within this new circle, the lowest price is 372. So we'll say 372 72 times 2.3, and we can say that, okay, so we might remain more in the trade. When it reach a new high, we can remain more in it for half the previous time that it started to make a higher new highs. So therefore for 4 months or so, or sell it when the price reach around 855. Those are assumptions you could make to guide you to decide where you want to sell it. But again, it's good to compare what happened before. Around those levels, you want to make a decision whether to buy or whether to sell, to see if it's okay for you to exit the trade or stay in it longer to continue accumulating profit, or if it's okay for you to buy, or if it's okay to wait because it will come back down to that support line few more times before leaving. So we try to compare what is happening to what happened around that same level before, to see if there is a pattern we can lean on to make our decision, so that we do not get in the trade too early or we do not exit it too early. So TRY, we purchased it in 2024 using short option and swing trading strategy, but we have not purchased it yet in 2025. So by looking at it, we selected this line to be the value line that we like to buy at. So it went up and it reached, it was done. It has been creating new high from here since somewhere there for over a year, all the way there, leaning on this support line to support that chain mountain, and now it's done. So it's pulling back and pull back to this level, but it didn't quite touch base with this support line. So I don't know if it's going to just remain there or if it's going to pull back at some point. But Friday the price dropped. So today is Monday, October 27, 2025, and we are doing the analysis before the markets open. So we are keeping an eye on it, and we know that we are seeing higher lows here. This low is higher than that one, which is higher than this one, which is higher than this one. So a green bar today, we could make a purchase, but at the same time it could turn around and pull back down again. But by looking at the previous time it touched base with it didn't really remain there long. So but it didn't quite touch base with this support line though. It was just a little higher up. But yeah, it is around an area we could buy some share, although we do not have money in the account to buy it just yet. But we are keeping an eye on it because is right there. We could buy few shares, but we know that there is a chance it might turn around to come back lower, and if it does that, we'll just keep a negative in the account until it start going up again. In the meantime, we'll keep an eye on it. Right now this line is at 142, and here is like the price is around 162. So there is about $20 difference between that distance there, but it's around the support line. It just didn't come back down to it. Sometimes when some charts do that, they will go up for a while and then they will pull back down to go close to the support line, closer than this. So we are just going to keep observing it. The next one we are going to analyze is TRV. So this one is around our buying zone, around the valley. So TRV, the price dropped on Friday, but the price is higher up compared to where we want to buy, which is this valley line. It reached a new high and it started going up from there. So we are just going to, right now is downward, but we don't know if that's just going to be a temporary downward and then it'll go up again. We don't know, but it's far, the price is far from the valley line at this point. It's closer to the peak than it is to the valley line. So that is how we swing trade without using moving averages. I used a little bit in 2024 when I started swing trading, but then as soon as I noticed that I could swing trade without using them, I took them off of my chart and just try to analyze the chart without them. I might go back to use them at some point in the future, I don't know. Once I master well how I can swing trade just using the chart, I could use the moving averages to confirm my decision, and I think they can be used that way to confirm what you think is happening already, instead of relying on it as the decision maker for you. So we have SNPS here. So I'm the one that purchased in 2024 and my daughter purchased in 2025. So I purchased 4 shares and she purchased 6 shares. I purchased mine at 619 and the price dropped, and when it started going up from the valley line, she purchased it at 428. And to sell it, I only want to sell it at a loss, so we waited until it became positive, reached a new high before we sold all of it in July. So you can see the time frame. Mine, I kept it for a year, and hers for what, 3 months or so. So we sold it for $650 a share, and that allows me to make about $125 profit on my trade, or 5% return, and she made 1,300 on hers, or 52% return. And that is how you can swing trade without using moving averages. If you understand them, you want to use them, that's fine. If you do not understand them and you want to see how simply you can swing trade without them, you can swing trade without them. You just keep analyzing the chart, and by swing trading the same stocks over and over and over, you will get to understand how those stocks on your watch list behaves, and get to understand the price behavior on your chart that you analyze. So we tend to analyze about the same stocks over and over and over, and that is how we swing trade them. Thank you so much for your time. We thank you very much for watching our videos. Thank you very much for your comments. Thank you very much for subscribing to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and ninasoap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small, 1 share at a time, and once you purchase a stock using your strategy and you make profits in it, even that just $1 profit after you pay your brokerage fee, you know that to increase that profit, next time you are going to buy that stock again, you can buy more share of it. For more of our swing trading tips, will you please check the list of the playlist in the description of this video. Thank you for your time.